If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. On this channel, guys, I like to bring you ideas and proven strategies that I've used in the past to build my wealth. And in today's video, I'm going to walk you through a loophole in our financial system that allowed me to make $350,000 for free. IRS tax code section 121 exclusion. This tax code allows homeowners, whether it be a single family home, a duplex, a triplex, or a quadruplex, to be able to exclude capital gains up to a certain dollar amount. So how does section 121 exclusion work? If you're a single person and you purchase a property, like I said, whether it's a 1 unit or a 4 unit, and you actually occupy and live in that property for at least 2 years, and you own that property for at least 2 years, you can sell that property for up to a $250,000 capital gain and pay no taxes. So if you bought the property for $250,000 and you sold the property for $500,000, you would not pay any capital gains on that $250,000 increase in value of the property. If you are a married person filing your taxes jointly, you have up to $500,000 exclusion. So if you bought a property for $250,000 and when you sold that property, you sold it for $750,000, you would have a $500,000 gain that you wouldn't pay any taxes on. I used section 121 exclusion 3 times over the last 25 years and made $350,000 without paying any taxes on the money. So basically I got the money for free. Of course, I paid for the property, I paid my mortgage, I paid my property taxes, but we all do that if we own property. The goal is to be able to use that property to make a large amount of money and not have to pay taxes on it. And that's where section 121 exclusion comes in. In a 5-year period leading up to when you sell the property, you have to meet those 2 requirements: the residency requirement and the ownership requirement. There's a 5-year look back. So if I bought the property in 2018, I sold it in 2021, you would take the 2021 sales date and you would have your 5-year look back. And as long as I lived in the property and owned the property for 2 years, then I qualify for that exclusion. And in this case, I would have qualified. Now, most people know about that particular scenario there. But now I'm gonna share with you 2 scenarios a lot of people don't know about when it comes to section 121 exclusion. Here's an example. I bought a property in 2018. I live in that property for 2 years. So in 2020, I move out. But I put a tenant in that property. So now I become a landlord. I leave a tenant in that property for 2 years. I collect rent. Obviously, I have to pay taxes on the rental income if there's any taxes to pay on it. But then I decide after that 2 years, I want to sell the property. Do I qualify for section 121 exclusion? And in this case, since I purchased the property in 2018, I lived in it for 2 years, and then I leased it for 2 years, which covers my ownership and my residency over that 5-year look back, I qualify for section 121 exclusion. Now let's move on to the next scenario. I'm renting a duplex for 2 years. Then I decide to purchase that duplex from the current owner. And then I put a tenant in that duplex for 2 years. And then I decide I want to sell the duplex. Do I qualify for Section 121 exclusion? So I moved into the property as a tenant in 2018, and I lived in that property for 2 years. Then I decided to buy that property from the owner, moved out of the property, put a tenant in the property for 2 years. So 2018, I moved in as a tenant, lived there to 2020, purchased it in 2020, had a tenant in there till 2022. So my 5-year look back starts at 2022. I take myself back 5 years. That's 2017. I moved in 2018. So I do meet the 2 requirements: residency and ownership within the last 5 years of the sale date. Some people may be asking, well, how can it be your primary residence if you didn't own the property? Well, with Section 121 exclusion, your primary residence, you don't have to own it. It just has to be, you can be a renter and live somewhere for 2 years, and that's considered your primary residence. You can buy that property from the owner, you can move out, put a tenant in it, lease it for a couple of years, and then sell it and qualify potentially for Section 121 exclusion. $250,000 if you're single, $500,000 if you're married filing jointly. That is the way I made $350,000 by using that loophole to my advantage. I would live in a property, I would move out of that property, put a tenant in it, and then before my 5-year look back expired, those 2 requirements, residency and ownership, before that expired, I would sell the property and take my profits and not have to pay any taxes on $250,000 up to $500,000. So if you know how our financial system works in this country, guys, you're able to participate and understand and utilize certain loopholes to your advantage. I think it's a great tool for everybody who wants to build wealth but doesn't necessarily want to have multiple properties and be a landlord. So you can do this with just one property at a time. See, the thing with Section 121 exclusion, there is no limit on the number of times you can take advantage of this loophole. You can only do it once every 2 years, but there is no limit on the number of times you can do it. So I know people every 2 years, they move out of their home, they sell it, they get their windfall of money, they buy a new property, live in it for 2 years and do the same thing over and over, and they've made a lot of money doing that. So you don't necessarily have to be a landlord, guys, in order to make money in real estate using Section 121 exclusion. Drop me some comments, let me know what you think. If you're stopping by the channel for the first time, please consider subscribing to my channel, share the video, and smash that like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Peace. If you want 2 free stocks, Webull is going to give you 2 free stocks when you open up a Webull brokerage account, and you can deposit any amount of money in that brokerage account. They're going to give you 2 free stocks valued up to $2,300. That's right, guys. You heard me correctly. You can put $1 in that new brokerage account, and Webull is going to give you 2 free stocks valued up to $2,300. So after the video, I want you to go to the description box of the video, and I want you to click on the Webull link. Sign up for Webull, open your new brokerage account, and get those 2 free stocks, man. And you're going to have an opportunity to start building wealth with that brokerage account. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing,
creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.